Welcome back. China's economy grew 5.2% in the second quarter, outpacing expectations and driven by strong exports. But with a new round of Trump's tariffs looming and export momentum potentially slowing down, can the recovery hold? Joining us to break down China's latest economic data is Meor Azalan, senior economist at MBSB Investment Bank.
When we see from an overall picture of the first half of the year, China export rose by 5.9%, totaling around $1.8 trillion. During this period, shipment grew in agriculture, fertilizer, and textile. Also, we see that the key factor of China's overall trade expansion has been a successful diversification away from the US market. Exports to the ASEAN saw a significant rise, roughly around 12% in the first half of 2025. For the 6 months of the year, China imports fell by 3.9% to $1.2 trillion, dragged by the drops from the US, EU, and Russia, while shipments from ASEAN countries rose. Therefore, the first half of 2025, China recorded a total trade surplus. So, in terms of economic recovery, so we saw the first half of 2025 has been stronger than previously expected, supported by government supportive policy measures.
Meor also warned that the fragile and temporary US-China trade truce could also slow China's long-term recovery and affect global economic stability.
Without a comprehensive new trade deal, the default is for tariff to resume or even increase. However, China export momentum may pick up due to front-loading, but with a risk of front-loading reversal. So we think that the recent surge in China exports in June was partly due to companies rushing shipments to beat August deadline, indicating current momentum is temporary due to the truce, not much of a sustainable trend. The US also, at the moment, one of the key risks is that the US is also targeting transshipment via third countries. For example, a 40% tariff on Vietnamese transshipment, closing sort of avenues by the Chinese exporter to bypass tariff. The US has also a stricter rule on origin enforcement to curb the risk of transshipment. This sort of may cause risk towards China export performance. So the upcoming August 25 deadline to reach a new trade agreement adds further pressure and highly uncertain. A failure to secure meaningful progress could lead to a renewed escalation and weigh heavily on China export outlook. Also, a sluggish global demand environment, particularly in a major market like US and EU, could also weigh on China's export growth. So I think in summary, we think China has demonstrated resilience through trade diversification and strategic industrial shift. However, we think its economic recovery remains fragile due to internal demand weakness and persistent threat to escalating trade uncertainty. Global economy should brace for potential continued uncertainty and potential disruption from the US-China trade war and geopolitical landscape.